Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 16th of July in London. I'm Caroline Hepker.
And I'm Stephen Carroll in Brussels. Coming up today, France's Prime Minister warns of mortal danger as he sets out plans to cut almost €44 billion in public spending.
The UK Chancellor vows to overhaul bank ring-fencing rules in a meaningful way as part of her Mansion House speech to the city.
Plus the Prime membership every bank wants. Wall Street's $1 trillion Prime Brokerage boom lures in European rivals including BNP, UBS and Barclays.
Let's start with a roundup of our top stories.
France's Prime Minister Francois Bayrou has proposed scrapping 2 public holidays in a bid to repair the public finances. The plans are part of an array of measures totalling almost €44 billion designed to pare back France's deficit, which is the largest in the euro area. Announcing his proposals, the Prime Minister set out the scale of the problem.
We
now have a duty to take responsibility. I believe that this is the last stop before the cliff edge and being crushed by debt. It's important to say it clearly. It is a mortal danger for a country.
Francois Bayrou added that France's debt increases by €5,000 every second. The government is aiming to narrow the budget deficit to 4.6% of economic output next year from a forecast of 5.4% this year, before bringing it within the European Union's limit of 3% by 2029. But with no majority in Parliament, Prime Minister Bayrou may not be able to push through his plans and runs the risk of being forced out through a no-confidence vote.
In the UK, the Chancellor Rachel Reeves says that she will reform ring-fencing rules for banks as the government looks to encourage informed risk-taking and boost economic growth. Reeves announced a range of measures to cut red tape and scale back post-2008 rules in her annual address to the financial sector. She urged regulators across the economy to be less cautious.
In too many areas, regulation still acts as a boot on the neck of businesses, choking off the enterprise and innovation that is the lifeblood of economic growth. Regulators in other sectors must take up the call that I make this evening, not to bend to the temptation of excessive caution, but to boldly regulate for growth, in the service of prosperity for our whole country.
Among Reeves's changes are cuts to bank capital and reporting requirements, paring back rules on the conduct of senior bankers and a rethink of the UK's Financial Ombudsman Service. The Chancellor also used her speech to acknowledge the recent turbulence in government after a U-turn on welfare reforms and her tearful appearance in Parliament that triggered a brief sell-off in gilts. In a separate decision, the UK government also dropped plans to set up a classification for what it terms a green investment after months of lobbying from hedge funds.
The UK Tax Authority cannot identify how much tax the country's billionaires pay on their wealth, according to a cross-party group of MPs. The Public Accounts Committee expressed disappointment that HMRC lacked the data to properly assess the country's wealthiest, though the body says it does not have a mandate to collect data on individuals' overall wealth. The committee's report further underscores the lack of timely and available data on some of the UK's wealthiest residents and the impact of recent tax changes on departures from the country.
Thousands of Afghans and their families are being relocated to the UK after their personal information was revealed in a 2022 data breach. More than 4,000 have already been relocated under the scheme, with a further 3,000 people expected to come to the UK at a cost of £850 million. Defence Secretary John Healey explained why the secret programme was set up.
6 months after the fall of Kabul, a defence official emailed an Arab caseworking file outside of authorised government systems. ARAP, as the House knows, is the resettlement scheme that this country established for Afghan citizens who worked for or with our UK armed forces over the combat years of Afghanistan.
John Healey spoke to Parliament after a court super injunction blocking the publication both of the scheme and of the data breach was lifted on Tuesday.
US President Donald Trump says he's likely to announce tariffs on pharmaceuticals as soon as the end of the month. While he didn't specify a rate, any levy would likely impact the likes of Eli Lilly, Merck and Pfizer, who all produce drugs overseas. Trump spoke to reporters at Joint Base Andrews.
Pharmaceuticals will be tariffed probably at the end of the month, and we're going to start off with a low tariff and give the pharmaceutical companies a year or so to build, and then we're going to make it a very high tariff because we got to move them in.
Trump also predicted that he could strike 2 or 3 trade deals before his self-imposed August 1st deadline. Representatives from the European Union, which faces a 30% tariff, are meeting with US negotiators this week.
Wall Street banks are setting records by trading on Trump tariff volatility. JP Morgan stock traders scored their second best quarter ever, delivering $5.69 billion in revenue, while Citigroup saw its best result in 5 years. Jared Cassidy, head of US bank equity strategy and large cap bank analyst at RBC Capital Markets, says that the period has produced opportunities for the sector.
It's not only the results that are driving these stocks higher, it's really about the deregulation opportunities for the banks, and that's a big support for the bank valuations at these prices.
RBC's Jared Cassidy speaking there. Elsewhere, volatility didn't translate into the same gains, though. At Wells Fargo, investment banking fees and trading revenue fell short of forecasts. The firm's CFO said that volatility made clients cautious on borrowing and making investments.
Kevin Hassett, director of the White House National Economic Council, is the early frontrunner to replace Jerome Powell as Federal Reserve Chief next year. The reporting comes as Treasury Secretary Scott Bessent told Bloomberg that the formal process to find a successor to Powell has already begun. Speaking earlier, Bessent suggested that Powell should also not remain on the Fed's Board of Governors after his term as chair ends.
We're not going to rush just because of some market deadline. Now, I think what the market's seeing is markets willing to look forward 3, 6, 12 months, and this is going to be good for the U.S., it's going to be good for the global economy.
Scott Bessent says he's part of the decision-making process, but the decision will come from President Trump at his speed.
So those are some of our top stories this morning. Looking at the markets, Asian equities are lower. Looking at stock futures for the US, also down. US Stocks 50 futures lower by about 0.25%. The inflation data out of the US has started to show tariff pass-through. That was what emerged from the data yesterday. So you had Treasuries, 30-year yields topping 5% yesterday, and we stand there still. Looks like bond vigilantes are really stirring also in Japan on the long end of the JGB curve. A big warning, it would seem, to other markets like the US, the UK. We get UK inflation data out at 7 a.m. London time this morning. Bloomberg dollar spot index is down 0.1%. Gold is up, so too is Bitcoin, gaining more than 1% this morning, $117,000. You've also got oil on the rise and the euro trading at 116.17 this morning. Those are the markets.
In a moment, we'll look at why France is proposing axing 2 public holidays to tackle the country's deficit, plus why everyone from Barclays to BNP Paribas wants a slice of the Prime Brokerage pie. But another story that we've been reading this morning, it's been 100 years since Art Deco was formally introduced to the world. It was at the International Expo in Paris in 1925, but it's a style that's living on and showing up most recently in jewellery.
Yeah, absolutely. And Kristen Shirley has a pair of beautiful stories on Art Deco jewellery in Bloomberg Business Week. Basically why collectors are spending astronomical sums to own original Art Deco jewellery. And then also she's looking at the new designers who are being inspired by this style. Obviously, it's not just jewellery, the kind of geometric shapes, the colours, that industrial inspiration. It's seen in buildings and in other forms of design. I mean, the period only lasted about 20 years, and yet it has enduring kind of beauty and appeal to so many people.
Yeah, and I mean, look at some of the kind of iconic buildings that we know, the Chrysler Building in New York as well, the Palais de Tokyo in Paris, and more, and that legacy lives on, which, might help to see sort of resurgences of the trend over the years.
Yeah, there's a wonderful Art Deco building really close to where I live, the Carrera cigarette factory, and it's got these amazing Egyptianate cats, 2 black cats. They're enormous, probably twice the size of a person outside, which is kind of another style influence of that period. Absolutely stunning. I just love...
imagining what your walk home is like now.
Yeah.
You're like, oh, there's the cats. I'm nearly home.
It's really a great building, but I just love Kristen's piece as well. And there are lots of exhibitions coming because of that anniversary. One at the V&A, I know there's one in Paris. So yeah, maybe you'll hear and learn more about Art Deco this year.
Yeah, we'll put a link to that piece in our show notes for you. Well, let's bring you more now on the budget plans laid out by French Prime Minister yesterday, including the 44 billion euros in spending cuts and plans to axe 2 public holidays. This as he attempts to bring France's public finances under control. Our reporter Julien Pontus joins us from Paris now for more. Julien, good morning. What were then the key measures that Francois Bayrou announced?
One of the key measures is a freeze on central state spending. It will also be mandatory for local authorities to curb spending, but it's a very comprehensive plan. Of course, this is the 2 public holidays you were talking about, but there's also quite a lot of measures to curb healthcare spending, social benefits. There's really merge a lot of state agencies to reduce their headcounts. There are a lot of things, lower that are being set in plan. It's a very comprehensive plan. As you said, it's worth about 44 billion euros. So it's substantial.
But, I mean, mortal danger, that's a stark warning, isn't it? The problem is Bayrou doesn't have a majority in Parliament. So big cuts, big plans, but how realistic is it that they're going to pass?
Well, some critics will say actually that the plan isn't really like a big structural plan with structural measures like really axing into spending. It's like freezing the spending. It's a soft version, some said, of IMF plan. It is really not like what Greece went through. It's not, what Milei has done in Argentina. When you think about it, it is something that can be done. And what Bayrou said also is like, if France does nothing, it will have to pay 100 billion euros by 2029 in interests to the creditors. So maybe mortal danger is too much, but, you could say it's getting to a slow death of the French economy if nothing is done. But you're right, there's no majority in Parliament to do it. So there's going to be a lot of negotiations going through. When you talk, for instance, of the 2 public holidays, a lot of people are saying, 2 days in France, that's 14 hours. Why not spread 14 hours through the year and say, work 10 minutes more per week or something like that? There's a lot of negotiations that you can do. So, the jury's still out as whether he can really pull it through.
Of course, this is a dilemma that's shared by many European countries: high public spending, high debt, high deficits. How worried are the markets about France?
At the moment, not that much. Like the spread, the difference between German bonds and French bonds went down just with 1 beep. So I think they will succeeded in a way by reassuring markets, like you say, okay, the deficit is not, we're serious about tackling it. We're seriously going to do something about it. But, I think the real worry will come this fall when, there will be a no confidence vote for sure. And, that will be a high stake moment for France because, we will get new elections. There's always the chance of having a far-right government, which the markets won't like. I think really it's going to become a key moment for France after the summer holidays.
Okay, interesting. Julien, thank you so much for being with us this morning. That is Julien Pontus there live from Paris.
Now, European banks have been pouring money into Prime Brokerage in an effort to capture the record revenue that Wall Street lenders have been earning in this area. The business of lending hedge funds cash and securities to help execute their trades has seen explosive growth in recent years. Our finance reporter Will Shaw joins us now for more. Will, good morning. Why has Prime Brokerage been growing so fast, and what's the backdrop to all of this?
Yeah, so basically, just to explain the growth, first of all, revenue from Prime has grown faster than any other product within equities trading in the past 5 years. Last year, income hit a record 27.7 billion, according to data from Chrysler, Coalition, Greenwich, and they're expecting it even higher in 2025, potentially breaching $30 billion. And so that essentially comes amid a rapid growth in multi-strat hedge funds, the likes of Millennium and Citadel, around the world, which need more resources in order to trade. And banks like it because it's a gateway to selling a broader range of services to hedge funds. If you can get them with Prime, it's possible you'll get be able to sell them a much wider product suite as well on top of that.
Okay, so then who are the biggest players? I mean, you talked about some, and what are the individual banks doing to try to make the most of all of this?
So the really big ones, like you'd expect, are Morgan Stanley, Goldman Sachs and JP Morgan, which have all got prime balances of over $1 trillion, to give you a size of the scale of the industry. But smaller banks are working hard to catch up. So the French firm BNP Paribas, for example, brought in more than 1.5 billion in revenue last year from its prime business. That was up 40% from the year before, and it gained a bigger market share than any of its rivals. So they, for example, have got about 500 coders all working to try and make the business as efficient as possible. Bank of America is trying to break into the top 3 by expanding its offering. And JP Morgan, one of the big ones, they made more than 4 billion last year. They're now pushing into Asia Pacific, looking at opportunities in Vietnam and Saudi, for example, building out infrastructure in India and China.
So what do regulators make about all of this then, particularly given the collapse of Archegos that only happened a few years ago?
Yeah, so nearly 4 years ago, Archegos Capital Management collapsed, inflicting devastating damage on its prime brokers, ultimately paving the way for the collapse of Credit Suisse. So regulators, as you would expect, are looking at this quite closely. In Europe, the European Securities and Markets Authority has warned that hedge funds active there are running bets with 18 times leverage and saying there's a risk of disproportionate reaction to unexpected events. I should say, though, that the regulators are vigilant and keeping an eye on this situation. There's no suggestion that they're panicking or that they expect any kind of catastrophe in the immediate term.
So then, who are the ideal prime customers then, from the bank's point of view? Who are they focusing on?
So the banks, I think because of the risks that emerged around Archegos, they want to narrow down the hedge funds to a small pool that A, have a lot of money, and B, are obviously quite stable. So they really like the big hedge funds, like the ones I mentioned earlier, and they're focusing a lot of resources on them. And that's made it harder for smaller hedge funds to establish relationships with prime brokers. There's also a risk that you can get a prime broker as a hedge fund. Within 2 years, you're not making enough money for your bank, and you find yourself unceremoniously ditched. So there's a series of smaller prime brokers like Clear Street, Jones Trading, firms like that are popping up to take advantage of this and start servicing the smaller firms. So there's a sort of secondary industry booming around prime.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.